Good afternoon. Thanks for joining us for our Tuesday, May 12, 2015 edition of Ask the Experts. I'm Chris Grams, I'm with CME Group, and I'm joined by two grain and agricultural experts who will be sharing their insights on today's USDA reports. To my direct left is Jack Scoville. He's Vice President and Futures Market Analyst with the Price Futures Group. He specializes in grains, softs, rice, oilseeds, and tropical products such as cocoa and sugar. Jack has been working in the futures industry for over 30 years, including 10 years on the CBOT floor. To Jack's immediate left is Virginia McGathey, president of McGathey Commodities, which she founded in 1987. She's a broker on the CBOT trading floor, where she's been a member since 1983. She regularly provides expert market commentary on commodity and financial markets. Thank you both for joining me today.
Happy to be here.
One note to our online viewers, we do have an opportunity for you to weigh in as well. Please send your questions to us today, and we'll be sure that our analysts answer those questions. It's that box right below the screen, so fire away. Well, we had the May WASDE report today, and Jack, I thought I'd start with you to see if you had any observations coming out of today's report.
Well, we had the WASDE reports, and we also had a production report, both of which had some parts of interest. Probably the most interesting thing I thought in the soybeans was what the USDA did to the U.S. ending stocks estimates for next year, which were put good and high at 500 million bushels, with a reduction in export demand of 25 million bushels from the current year to the next year, which is not a good sign. Just shows just how much production Brazil and Argentina have. Brazil estimate probably at 94.5 million tons, still a little bit underestimated. I think it could be closer to 95 or 96 million tons, and Argentina probably producing somewhere around 59, 60 million tons of soybeans. Going to be plenty of competition there, and on the other hand, USDA being very conservative with how China's import demand for soybeans is going to be. So between the big production down in South America, it looks like a pretty big crop coming here, given as long as the weather holds anyway, and with the caution on the Chinese side, USDA made that estimate really good and high. USDA also showed plenty of production on the corn side, but that was pretty much in line with expectations, maybe a little higher. And the ending stocks estimates were also a little higher, but once again, USDA showed, at least for this year, a cut in export demand of 25 million bushels, which is pretty much facing reality, I'd say. And also showed some caution on the Chinese side as well for the corn imports. China and just about everybody else has been touting how much corn they got, and USDA is agreeing with that, and that'll probably keep their import demand to a minimum, and not good for our feed grain producers, be it corn or sorghum or whatever. And then on the wheat side, to me, the production estimates were high. The ending stocks estimates were high, but really not too terribly out of line with expectations. But what was interesting was what they did, especially with the hard red wheat production estimate, which was higher than I think the trade expected. And given the wheat tour that we had last week out in Kansas, after that, I think a little bit higher than what people had expected as well. On the other hand, the soft red production maybe a little less. So we didn't really see the spread action in there I kind of expected today, but maybe we will the rest of the week.
Yeah, that's kind of an interesting touching off point. So we have Virginia, who I know you situate yourself in outside the wheat options pit. Can you talk a little bit more about that expectation or what you're seeing in hard red winter wheat versus soft red winter wheat? I know we were talking a little bit before we got started, and Jack was mentioning that sort of spread and some anticipation of additional trading, but maybe you can...
we really did expect actually more participation in the spread, but I think that it tells the story that the shorts are really, the bears are really controlling the market here, and I guess even with the scare that that we might get a run up, there's been some damage to even the hard and the soft red. We had a little bit of a run up. It did not scare any of the shorts out, and so they're clearly in control. We got a little bit of a lift, thinking that there might really be something to scatter the spread and really give it some, just get something behind it to really get some activity. And there was almost nothing. That was really surprising to me, and I agree with Jack that later in the week I think we're going to see some interest in the spread. Now where is it going to go? We've got the report out. We've got another month before anything else is going to come in, and now there's going to be a little bit of strategy in looking at the world, the world wheat supplies, and looking at where we're going to go. And there almost is nowhere to go. If we got the stronger that the dollar is, that really is putting pressure on both the hard red and the soft red wheat. And I think that possibly could be what's like kind of keeping it in line and keeping the market from like swinging around. Although we've had the most activity, although beans are down pretty strongly today. But wheat overall, we were talking earlier that it kind of operates as it gets oversold and overbought regularly. It's a thinner market, and there's a lot more volatility in it just in general. Mm-hmm. But it's not looking like a lot going forward.
Well, I'm hoping that we have some farmers or some other hedgers or commercials who are watching our webcast today. What sort of advice are you giving to your customers in light of today's report? Any new advice that you're providing to hedgers relative to kind of the major grain and oilseed products that were covered in today's report?
I guess for the near term, I'm probably going to use this break in prices to make sure that I've got some corn on the books, just because we're getting close to 350, which seems to be a target for everybody. But when you go back and look at, say, the July contract on a daily chart basis, when you go back and look where the harvest lows were, we're not that far away. And to me, do I really want to make new lows at this point in time with the crop just finally finishing getting into the ground and just starting to emerge, and we still got a whole growing season in front of us. I don't know that there's a whole heck of a lot of upside. I just feel like at least till we get another 6 weeks or so down the road, we may be seeing something close to a low, and maybe we can bounce 10 or 15 cents, or maybe not even. But,
right.
But I better probably take the opportunity to get some of that booked. And the beans, I guess I'll have to leave alone after the price action today. Although it's also getting relatively cheap when you compare it to some of the last year's prices. It may be worth taking a look at from the long side as well. And wheat, I guess I'm going to have to go, as I say, I really kind of expect a little bit more spread action overall. Wheat's kind of more of a market I've been going hand to mouth with, and I suppose I'll probably stay that way until we get a little closer to the harvest, which is only, another month away anyway. So.
Yeah, I think that we have to watch that too. I mean, really on the downside, the only way that the market is really going to spike down quickly is if we get a whopper of a number somewhere along the line, and it's really like not coming. We are really close to the lows around here, but the market can still sink. I mean, wheat by itself, when we got down to 61, that's like a 5-year low. We were talking earlier that pivotally with the Chicago wheat, 484. Was a pivotal number. Once it gets below that, we get another wave of selling coming in. That being said, do people want to jump on and get short here? I not with both hands for sure. And I agree with Jack that what would be your advice to say you look for places to try to buy it, but if the market could possibly just sit in this area for quite a while as the harvest numbers come in, as good weather, persists going forward, there's really nowhere for it to go. The dollar's stronger. We need some demand around the world. Maybe if they find an extra billion people around there to start coming and buying, that might give it a little bit of a pop.
Or at least a billion people that like a lot of pasta and noodles, I guess.
Right. Right, exactly.
I know a lot of people pay attention to the corn-bean spread leading into planting season. Is that something that you're keeping an eye on now that we've seen a report that seems to be a little bit more supportive to grains and a little bit more bearish to beans today? Is that something you're keeping an eye on as well? moving
Well,
forward?
earlier, I think that earlier, there was the Corn Belt it was so wet, it was very difficult to even think about the corn planting, and they were way behind time, way behind schedule. But then once it warmed up and it dried out, there was a huge. Last week was about the biggest corn planting of the year. And they really got a lot of it in the ground. And that lends itself to saying, okay, there's not going to be a lot of acreage moving over to soybeans. And so from that standpoint, I think that actually was part of what held the beans up. But now coming in now, we've got a huge crop. The numbers could really get bigger. I think certainly the South American numbers can really get way bigger. That will put an enormous pressure on us. The price of their grain is definitely going to make us less competitive, and if the dollar gets a little bit stronger, that will hurt our prices as well. So that certainly could push it in there, and that's why I think that the corn and beans are kind of staying right here. I mean, beans specifically actually got a good rally, and we got up almost to $10, and that gave itself some room to fall, where corn kind of has not really moved all that much.
So we've mentioned a couple of outside factors that we're keeping an eye on. Beyond today, are there other factors that you're looking at relative to these markets? You both mentioned South American production, Chinese demand, certainly something, exports that we'll keep an eye on. What other factors are you keeping an eye on right now? Sort of looking ahead, I should say. What are the other factors you're keeping an eye on relative to these markets?
Well, I mean, when you look at wheat specifically, you've got Russia, which had an export tax, is now basically taking the tax down to, I think, like $1 a ton, so next to nothing. And that'll push them right back into the world market. That'll affect wheat pricing over the next, they're doing it early too. And so that'll affect prices. It already has to some extent. We'll probably continue to put a damper on prices, and we'll see how the Ukraine production comes out and how the European Union production comes out. All those areas are having very good weather so far this year, so the production prospects are pretty high. In fact, very high. And since the euro and the ruble and whatever are not exactly super strong against the dollar, it's going to continue to keep our prices under some pressure. So I'm sure we'll keep a very close eye on that situation. We'll keep a close eye on our weather, of course, as we go through the summer. Also over in Europe, where they're going to have their summer crop season going on. For Ukraine, for the corn, for example, because they're probably going to do most of the Chinese corn business, if there is any this year. And then we'll start paying a little bit more attention also over in the wheat for Australia and Argentina as both those countries start to get their winter crops in the ground. So that from a weather and just crop production point of view, those will be the place, and a little bit from a marketing point of view, those will be some of the other places that we'll look at as far as I'm concerned.
I think that it kind of goes to that point. When you think about over the past 5 or 6 years, if you looked at weather, you could not look at weather without thinking the extreme is the norm. Something extreme has happened almost every single year that has really changed the strategy of how the crops are in, how the pricing models go. But things have really toned down lately. And if you adopt the extreme as the norm, what could happen? Well, dare I say, what could happen? We can have, was this the year of the locusts or something like that? Something completely outlandish would be the only thing that, would come in here. I mean, we've seen some extreme weather. Even if we've had extreme weather here, extremely bad weather here in the U.S., there's so much grain around the world that it will have somewhat of a hiccup on the market. But I don't know that it would, be so huge where we'd have a tremendous trend moving one way or the other. With, the weather doing so well in South America, Australia actually is okay. I mean, the only real, would you say, Jack, the only real a player would be China coming out of the blue with something, but we've seen that song so many times before, and it kind of has never really come to pass to where it's made such a huge difference.
Well, the problem with China is they keep about a year or two's worth of supplies and storage for most of it, especially the feed and the food grain side. I mean, they've got a huge rice stocks, they've got huge wheat stocks, they've got huge corn stocks, and they buy the beans. So I mean, that's where you look. I guess to that point, though, you're going to have to keep an eye on the El Nino that's forming right now and has formed. We already know that there's going to be some problems in countries like Philippines, which is the largest importer of U.S. wheat in Southeast Asia. Probably they might have to import a little bit more. In fact, they might have to import some corn, and they could change the tone in the rice market, for example. The last time we had a big El Nino in that part of the world, it affected not only Philippines but also Indonesia. Well, it affected most of Southeast Asia and actually spread into India. And all the rice-producing countries over there put their offers up to $1,000 a ton,
right.
and that got me all sorts of free publicity out of that. But, I can tell some stories about that, but I'm not suggesting that we're looking at $1,000 a ton rice anytime soon. But what I am suggesting is that it's a lot of people over there and a lot of mouths to feed.
It's a huge emerging market, and I think that we'd be, remiss to really, look away from that. And that market is going to be a player as the years come by. With the El Nino over there, I think you're absolutely right that something like that coming in is going to be front and center.
They buy our corn, they buy our wheat,
yeah.
And they buy our soybeans. So it looks to me, as far as I'm concerned, they're probably going to have to buy more, and maybe, knock on wood, and they'll even buy 100,000 tons of rice or something like that.
Yes. I could see that happening. I mean, when you just look at overall right now, what does the picture look like? That would be the one area to really keep an eye on. Everything else we've kind of seen, so we're watching, but that's one that's a little bit different that we're watching closely.
Interesting. Well, we talked a little bit about weather and obviously the El Nino, something to keep an eye on. A little closer to home, not all of our viewers are necessarily producers and understand the importance of weather, but for those who are watching, and maybe you both could touch a little bit on the importance of weather right now. So crops in the ground, as you said, one of the biggest weeks in corn in terms of putting corn into the ground. What does weather mean right now to the production of grains and oilseeds as we're getting into pollination and other critical portions of the growing season?
Everything.
In a word, everything.
It's the energy, you're right. Next to the sun, I think, yes.
No, seriously, I mean, it can get pretty, it can get a little bit tough to describe. Anybody who has a flower garden at home knows that you need to have you need to have the right amount of rain. You need to throw a little bit of food at them, so that's the fertilizer component. But beyond that, it's Mother Nature. You need the right rain, the right sunshine. When you get the crop in like this, you don't want to see a quick inch or so of rain come down in an hour or two, because that'll crust up the soils and make it harder for those little corn plants and soybean plants to come out of the ground and hurt yields there. And then especially once you get into pollination, corn, we have discovered over the last decade or so, really likes it cool. So if we can have a cool, say up into about July 4th or so, with some good consistent rains and some sunshine in between, we'll have one heck of a corn crop coming on. And whereas beans tend to like it a little warmer, so if we start warming up a little bit after July, that'll probably be really great for the beans as well. So
and we could very well get that too.
Yeah, we could. Yeah, and I mean, we're off to kind of a coolish start so far. Well, actually, I shouldn't say that, but it feels like it's been a coolish start.
Well, certainly here on LaSalle Street it is, right?
Yeah, it has been. Yeah.
We have to look at that. One of the things I think it's important for people to know, that I find that when I come across people that are not really in the agriculture market, that they really have to understand the technology behind growing grains. It is so finite that we know day by day, when we don't get the corn in the ground specifically on a specific date, exactly what effect it's going to have on the weight, the tonnage at the end of the term. So if we're a day late or 2 days late, every single moment actually makes a difference. And so this is really down to a science on an enormous level. So we do understand. So when I'm telling you that it was the biggest week, it's so important, is that did we get 60% or did we get 61% or 60.5%? It all makes a difference. And in the end, when we're adding that tonnage, and Jack will tell you, everything absolutely matters. So those moments, those weeks, day to day, in the beginning, during pollination, earlier for corn, a little bit later for soybeans, that absolutely makes a difference during those exact weeks.
Yeah, I mean, the seed is designed anymore, whether it's GMO or just regular hybrids, which hardly anybody uses anymore. It's all been modified one way or another. But it's modified to produce perfectly under perfect conditions. By perfect conditions, I mean, if you were to look at Chicago, get a 50-year history of what rain is in May, June, July, August, how many daylight hours we get, sun we get, what the average temperature is, all that. Well, that data is really easy to get from the National Weather Service, and a lot of people have it. And what they do is they'll design the seed to produce its best under those particular conditions. So if we get a cool year for corn, that's really good. But if we get a hot year, because it's so fixed, it can still produce well, but because it's so fixed for that perfect, that absolutely normal condition, you're probably going to lose a few bushels. And it's amazing. We've seen over the last few years when we've had kind of a cool, damp summer, whatever season it is, that the corn just is crazy, and we get our best yields. And the soybeans tend to do very well as well. If we ever get back into a droughtier situation, you'll really see the yields tumble. And that was always true before, but it seems like it's even more so with the modified seed.
Right, I agree.
So fair to say, a lot of uncertainty around what Mother Nature will bring us as with any year, but a good time for producers and others to be thinking about risk management.
Yes.
Always a good time.
Yes, always a good time.
One of the things that it looks like we have one or two questions here from our audience. Let me just take a look at this one here and see if this would be a good one. Okay. There was a study out from from Kansas State University. Mississippi said that in the coming decades, quarter of the world's wheat production will be lost to extreme weather from climate change. Can Jack and Virginia talk a bit more about long-term thoughts regarding extreme weather and how wheat crops might be affected or altered in the long run? So, again, that question, new study out from University of Kansas State, said that in the coming decades, quarter of the world's wheat production will be lost to extreme weather from climate change. Any thoughts about the long-term impact of extreme weather and how wheat crops might be affected?
Well, it definitely will be affected. I mean, absolutely. I know that the bands of the weather patterns are moving around, and so certainly some of the hard red or the soft red are going to be affected a lot. I think that there has been a movement to really add more wheat into into our food supply. It's actually a little bit less even in the livestock supply, but there's going to be a tremendous amount of shifting so much around the world that if we're going to lose some wheat, we're probably going to lose some corn and soybeans at the same time for the same reason. So how is that going to affect it? The price is going to go up. It's going to a perfect economic situation. I don't think the wheat is a little bit different in that we have the summer and winter wheat, and we don't have quite the worry like the GMO that's you're working perfectly with corn and soybeans. Even wheat might even start competing more with the rice at that time. If we lose that, what effect is that going to have? I think that's probably just going to give a boost to some of the other markets. It's been since 2008 that we saw the market absolutely off to the races, like nothing we had seen before in the lifetime of the agriculture market. Can we get back there? I think that all of us that went through that 2008 time certainly would know maybe better how to participate in it, because I had a difficult time buying it every dollar higher, and I'm like, oh, I just can't buy it now. And of course, it went another dollar higher. I think that the market would actually move very quickly in that direction. But with the science we have now, I don't know. I think that we might be able to, move quickly to start to mitigate some of that situation. But clearly, we're all tied together in wheat, corn, and soybeans. And wheat's such a huge market worldwide. We have such huge supplies. It would take an enormous, weather problem to catch us completely off guard. I think that the market will start may start moving in that direction year by year. I don't know that I see something really giant on that level. I mean, what do you think on that, Jack?
I guess I'm kind of two minds. I think maybe if we get extremes, as suggested by Kansas State, that probably means that even though we might lose some current areas to production, it might open up some other areas that could be for production. So I guess I understand where they're coming from. I just wonder if we use the same areas, certainly I can, if say concentrate on the Great Plains and the Midwest, could we lose some wheat acres here because of weather extremes? Absolutely. Does that mean that maybe they can start producing it better down in Mexico or something? Absolutely.
Yeah, right.
Who knows? We don't know that. And I know, you hear a lot of these projections down the road, and that you have to be careful with them because science is right around the corner, and we've done a lot with seed technology already. Who's to say that we can't do a lot more with seed technology and kind of mitigate some of those effects? And the third thing is a lot of just weather forecasters will tell you we're in a cyclical time. A lot of the climatologists will tell you that that's bunk. We're in a big time change in climate, and I think that there's still kind of a jury out on exactly what's going to happen, which we might not know for another decade or so. But if we are in a cyclical time, as the weather guys would suggest, then sooner or later this too shall pass, and we'll get into a new weather regime, which might mean that here in Chicago, instead of looking at corn and soybean fields when I drive an hour out of town, I'm looking at rice, or I'm looking at polar bears. I'm not real sure which. But I'll be looking at something different, and that's still a possibility that's out there. I'm not saying that I'm not denying global change. I'm not, or global warming or anything like that. I'm just trying to keep an open mind and listen to both sides of the argument. And but to me, even if we are in a global change and we do have a warming or even a cooling situation here, what's good for one side or bad for one side will be what's good for the other. So I'm not necessarily convinced that we have to lose all that production just because of global change. We can move it somewhere else.
Yeah, that's true. I think you're absolutely right. We've been good at adapting. So when you look over just even the past 25 years, when we've had different situations, even during our drought years, everyone's been able to adapt very quickly. And in the last 25 years, so many things have changed to adapt all across the world. It's not just the U.S. And so there's so many participants in the world as well, and adapting to that is going to be much quicker than it was just 20 years ago.
Well, and we've, at the exchange, tried to adapt to meet customer demand and provide products that also help to manage risk on a shorter scale around weather events, some of the short-dated new crop options,
right.
Some of the weekly options. We've also seen some interesting activity in wheat with the calendar spread options. So I can't end this without giving a plug for some of our shorter-dated options products. But any thoughts on your own use of those products? Have customers used those shorter-dated options for their risk management around weather?
Clearly, we traded a lot this week. We traded in wheat options. We've traded an awful lot. Corn options did as well. These products are really maturing as each report comes out, as each expiration comes of each contract. More and more people are really learning how to use them. They're really there for the farmer, for the end users to participate. They're there also for traders that are just in the market themselves, a way to hedge, to buy insurance. And the more people learn how to use them, the better they will be. There are so many products, so many sophisticated products that just have a basic use, and as everyone starts to understand how they work, I know that we have weeklies, we have short dated, we have intermarket CSOs. As everyone starts to look at that, there should be no reason why anyone should go bankrupt if they're wrong, if they're moving it even to the farmer. Well, I was just talking with someone about that. Like a farmer now that has even a small farm, there should be no reason that if a drought came and they lost their entire crop, that they shouldn't lose. Not only should they not lose, they can still profit on the other side. And that's by using all the different products that the CME has. So every product there is made to help everyone else, and as we all start to learn more about their use, the participation of that will help everyone greatly and keep everybody still in the game and keep everyone afloat. And it's really the way the market is these days.
Well, that's the best plug I could have asked for. Thank you, Virginia. Jack, you had the first word. Any final thoughts? And then Virginia will give you the closing word. Any final thoughts on today's report or anything else moving forward?
Well, we're into the new crop season now. I guess that's probably the main thought I have. So the old crop data, even though there were some changes that were made here on the old crop data, I don't think we really got to them, and that's because that's really the interest is shifting over to the new crop, and that will continue to be the market focus. Generally, when you look at especially how corn and soybeans act at this time of year, once the crop gets into the ground and has started to emerge, and we see some type of a temporary low. So I do anticipate that we're getting close to that, as the crop has gone in very quickly over the last couple of weeks due to the great weather that we've been talking about, or Virginia mostly, and due to the untold billions of dollars spent on wonderful farm equipment that the farmers have and we're able to use this year to a very, very good end. So we're off to a good start. That'll tend to limit the upside as we look forward, but I still tend to think that the downside is somewhat limited from here. Once we get to pollination towards the end of June in corn, once we get to flowering in July in the beans, and we see that that's going through with fairly good weather, there might be some more downside potential after that. But for now, I tend to think that we're probably close enough. For the wheat market, I tend to think might have a little bit more downside just as we're getting close to the harvest, and as it looks like we got a pretty good crop out there. And just the rice, I thought it spiked out at $10. Maybe it did today at $9.20. I sure as heck hope so. And for my rice producers, because they need some price. We're well below the cost of production right now.
Virginia, you have the final word.
Well, I agree with Jack on that. The weather is really what to watch now. There are no more real secrets in the market. So watching weather, watching just where the money flow around the world financially, you can basically see on the news to see where we're going. But this year is definitely going to be a banner year on what the U.S. can do in production of all their crops across the board. I think that we're going to see just what we're made of and what, all the different design and different technology that we've been able to use, along with a little elbow grease. You're going to see something really fantastic come out of this country that's going to be something that we're going to see across the world about what we can produce. As far as the pricing goes, I think that we might be sagging a little bit, but we're all in the market. It all is a cyclical market. So we're going to watch the weather and just what's really on the outside. No secrets going forward.
Well, I want to thank my guests today, Virginia McGathey and Jack Scoville. Very interesting and robust conversation today, so thank you both for participating. We also will have an archived version of today's panel available on our YouTube channel. That's youtube.com/CME Group TV. Thank you very much.